In November, the workforce index declined a little bit from a high of 55.2 last month to 52.6 this month. That decline came as a result of a decreased number of job postings on CareerLink. Well, the general economic conditions, I would assume, caused some of that decline. It was interesting that of the 16 industry groupings that we track, 14 of those declined during the month. The other thing that makes the ratio go down is that the index is based upon a ratio of CareerLink postings and the state unemployment level. And so if the state unemployment level also goes down, that will tend to draw down our workforce index, the value. And the state seasonally adjusted unemployment was the lowest in October, as it's been for the whole year. The greatest change occurred in some of the smaller industry groupings that we attract. One of the largest groupings that we do attract is health sciences. And the health sciences were one of the two that increased, but they only increased by about 1%. Well, the largest group that we have is business and administration category, and that group as a whole declined, I believe it was about 12%. The Nebraska Business Expectations Index, is computed by Creighton University, went up slightly during the month from 45.5 in October to 47.3 in November. Well, it's interesting as you look at the data, if you just stand back and take a look over the year for both the Creighton Business Expectation Index as well as the AIM Workforce Index, both of them have moved up and down from month to month, but basically since the end of the first quarter of 2012, or basically the last 8 months, the index have tended to kind of move sideways, with the Nebraska Expectations Index having reached a peak around May and then declined to below the 50 point or growth neutral point for the latter part of this year. Meanwhile, the AIM Workforce Index has gone up a little bit over the last 4 or 5 months and is above the neutral growth level of 50. However, both of those indices are basically moving sideways, and they don't seem to be indicating any dramatic change one way or the other in terms of the local economy. Well, if you look at the whole last 6 months of this year, it's been filled with uncertainty. It was the uncertainty associated with the election. It was an uncertainty associated with what's going on in Europe. The Chinese growth rate has declined a little bit. Meanwhile, now that the election is over, Europe is no more settled. The Middle East is no more settled than it was. China doesn't appear to be any more rapid growth than it was predicted earlier, as well as now we have this fiscal cliff question that raises substantial questions relative to taxes and tax levels, as well as government expenditures. And so until some of that is resolved and some of this uncertainty kind of levels out, and the business owner and the management, the boardroom gets a better feel for where the economy is and where it's heading, I think we're going to continue to see kind of a sideways drifting, not only of our local economy, but national economies as well. Well, if it is truly a lagging indicator, why then we might see in the future here, if we would see the economy, one of the risks of the fiscal cliff, if they don't answer that, is that the economy will drift down. And we could see current employers would maintain employment levels longer than maybe some of their business expectations would justify. And it's difficult to lay off people. It's difficult to change workforce numbers. And so if the economy does drift south, we could see the workforce index remains relatively strong a little longer than some of the other indicators would.